It's 5:31 in the morning. It is Friday, the 16th of February. Good morning. Thank you for joining us. I'm Lauren Simonetti.
Good morning. I'm Cheryl Casoni. Bitcoin, huh?
Are investors back in Bitcoin? Are they back in the stock market?
Well, they're loving the markets.
What
a good day.
A tremendous week. Taking a look at the markets once again, you can see futures up about 70 points on the Dow. Investors this week have put the correction that we saw last week in the rearview mirror, or have they? Some analysts say we might be racing back to record highs too fast. Is it time to put on the brakes? We bring in Sean O'Hara of Pacer ETFs and Edward Stringham of the American Institute for Economic Research. Hi, guys.
Hi. How are you?
Is this too good to be true, Sean? I mean, is this rebound for real? We've been up this week by 5% for the most part. And yesterday we finished at the highs of the session. That's a good sign.
I think that's a good sign. I mean, we're still 5% below the all-time high, so we still have some room to go before we race all the way back. I think the correction that we had was needed. We had almost 2 years uninterrupted without a correction. I think there was a couple of things that spooked the market, perhaps. The threat of inflation and maybe rising rates. I think, yesterday and the day before, with two bad prints on the CPI, on the inflation number having the market go up, I think maybe sets that aside a little bit. And I think that, that maybe we're underestimating some of the programmatic selling that went with the VIX. There's a lot of things that are vol controlled today, a lot of structured products, indexed annuities, and exchange-traded note that had an issue. And that forced program selling. So I think a lot of that's perhaps out of the way. And I still think the fundamentals are solid. Yeah, so
in your view, Edward, did anything change this week versus last week? Because inflation is certainly still here, as is arguably a strengthening economy.
Yeah, I think we've got this obsession that there's never going to be fluctuations in prices where it's like, we're 5% below the all-time high. We're all going to die. This is the worst day of my life. Whereas in reality, there's going to be fluctuations. Things are going to go down. Things are going to go up. And people seem to forget that. We can see that in all markets time and time again. We're still 5% below an all-time high, and we're recovering from that all-time high.
And Edward, we're going into a long weekend, the holiday weekend. Edward, do you think that changes anything for investors as they set up for today's session?
I think this is just a long-term trend that we've got to be looking at. I mean, you could see this in every market. You could see this in stock markets. I mean, I don't even want to get into cryptocurrency markets, Bitcoin. That just the amount of fluctuations is huge. We should expect this, and it's not a surprise.
We were just showing oil prices, Sean. They're about 61.56, right? And one of the things that is supporting, one of the factors supporting higher oil prices is the dollar. The dollar's been weak. We're looking at what could be the worst weekly loss for the currency in 2 years. What do you make of the weak dollar amid a Fed that is inclined to hike rates? That seems unusual.
Well, I was looking at 10-year bond yields the other day because there's this obsession that, we won't be able to finance our debt. Our 10-year bond yield is higher than Germany, France, UK, and Italy. And so, when people are starting to look for places to put that fixed income money, and you have to choose between getting 1% on a 10-year Italian bond, government bond, or almost 3% on a U.S. Treasury, I think most people will choose that. And I think that's where the support for the dollar eventually comes from, is as people outside the U.S. or inside the U.S. buy those treasuries, they're buying dollars, and that should continue to support the dollar. So.
And in terms of the 10-year yield, Edward, as we wrap this up, it used to be when we kicked closer to 3%, the stock market got totally spooked. Are we now looking at that spooky number being 4%?
I mean, I'm personally worried about this risk of hidden inflation. We've had such abnormal monetary policy over the past few years, and eventually, how long is this going to last? And if we do see hidden inflation creeping up, I think that is the long-run risk. They're always leaving us guessing with these changes in who's in charge of the Fed. We don't really know, and that's my big problem with the Federal Reserve, is it can change so drastically as you have changes in who's in charge.
Yeah, and now we have a Fed that kind of signals everything. Maybe they shouldn't. Edward, Sean, have a good weekend.
I don't know. I think Jerome Powell's running the Fed. Last night, I heard that somewhere. I don't know.